Oil prices today on the back foot, WTI lagging behind Brent, and one expert says that will not continue. Harold Hamm, CEO of Continental Resources, says the U.S. supply growth that the EIA expects from shale is just plain wrong. You can see there it's the August 2017 and September 2017 EIA projections, but DAPA, which is a group that Harold Hamm founded, Domestic Energy Producers Alliance, sees much smaller growth. When Harold talks, you'll want to listen. He built Continental from the ground up, one of the fathers of shale, and is on a mission to make America energy independent within the next decade. He's also former Trump presidential campaign senior energy advisor and joins me now. Harold, always a pleasure to talk with you. Walk me through what you think is going on with the U.S. shale supply story versus what the EIA thinks.
Well, Alex, it became evident in talking to all the producers across the U.S. that they were just flat wrong. EIA was flat wrong. People were very disciplined across America, the producers were, and they had cut back. Obviously, the price fell when Nigeria and Libya came on with about 400,000 barrels unexpectedly in April through June, and the price fell a good 20% through that period of time. And so operators cut back, and EIA didn't recognize that and kept predicting that we'd be close to 10 million barrels by the end of the year. And so we saw that error, and a lot of people went to work and basically came up with calculations that showed that they were about 100% off, so some 500,000 barrels. So really the numbers by the end of the year, and it's going to be rushed to get there, is about 9.35 million barrels by year end. So that's a big miss. And so anyway, we met with them, showed them the data that we had, and they've corrected some of it.
Yeah. And
we've had an increase in price as a result of that. But still, they're way off, some 360,000 barrels high for this year.
Yeah, and Harold, those barrels are significant when we're in an oversupplied market. And when you talk to most CEOs, they say everything's fine. I'm drilling as I've always drilled. We may have had some stumbles. 2018, those gonna be awesome. You don't see it that way. I mean, you see drillers doing something different.
Well, you know, the new normal is that we have capability of producing a whole lot, but you've got to get a return on investment, and operators like myself and others realize that they have to have return for shareholders. So you're not just going to go out there and drill in an environment that you can't make a decent rate of return. So that's where people have been this last quarter and this year. So we noticed that in the second quarter. Basically took a reading of all the public companies and found out that they'd cut Capex, and number two, production was down for the second quarter. All the public companies that reported.
I want to pick up on what you said about returns, because Anna Darko, after the bell yesterday, talked about a buyback. The idea that it's growth at any cost is no longer the story. It's going to be about returns, getting balanced free cash flow. Is Continental doing the same kind of thing?
Well, certainly we're interested in rate of return and you know, making money for the shareholders, and we're doing everything to position our company to do that, and we've done that over the last 3 years. But you know, I said that prices under $50 were unsustainable in building new supply in the world, and that's basically what we're seeing today. So yeah, we're looking at every angle to make sure that we have a rate of return to the shareholders that makes sense here at Continental.
So at 50, would you do say a dividend or buyback before you put more money into Capex?
Well, we have some great rate of return projects, and I believe that this price below 50 is very short-lived. We're seeing it above 50, and I think it's sustainable above 50. We're seeing inventories come crashing down, coming down faster than they have over the last 2 years. So it's correcting as we see it today. But you know, this oversupply that EIA is talking about isn't happening. The market has to realize that, and it's distorting. It's making it tough. You talk about putting America first.
Yeah.
When we're lagging Brent world prices by $6 a barrel, and that's where it's at today, That's not putting America first. That's putting America last. And that's a result of this exaggerated amount that EIA has out there. And everybody pays attention to them. They're supposed to be the ultimate authority, if you will.
Just look at the trading at 10:30 on a Wednesday. But just to be clear for Continental, it seems like you actually would be doing Capex first before you considered a buyback or a dividend.
That's correct. We've adjusted Capex, in the past. We didn't this last year. We stayed with our Capex, but we've cut costs. We've raised our production forecast for the end of the year somewhat. So Continental's doing well in the premium plays across the country. Bakken is fabulous. It's the best pure play oil play in the nation. Yeah. Scoop stack. So Continental's very well positioned.
So if you're looking for higher oil prices, which you are, we've talked about it before, that means you're not hedged. Is that correct for 2018?
Excuse me, I didn't understand. That means...
Are you hedged? Is Continental hedged for 2018?
We're not hedged at these low prices. We think that the price today is about 20% understated. That was if you look back and see what happened when Nigeria and Libya brought on the 400,000 extra barrels, price was cut about 20%. Well, that's what we're talking about here in this market. EIA is still 360,000 barrels over on their forecast. And if they get it right, and the market gets it right, we should pick up 20%. So that's about the same amount of barrels. So we don't believe today's the environment that you should be hedging barrels in.
So you think 60? You think 60 for WTI? And if you do, what happens to the spread between WTI and Brent?
I think you get in a 60 range, that's an entirely different story.
So if you see a 20% upside, though, for WTI, what price is that and when?
Well, you have 20% on 50 today, you're looking at $60 a barrel. So, there's a lot of analysts predicting that we should see those prices 20% uplift.
So then wrap this all into the OPEC monitoring committee that we're seeing now in Vienna. There's talk about will they or won't they wind up extending the cuts. But by your scenario, they shouldn't. If we're already seeing production come down in the U.S., they shouldn't extend those cuts.
Well, I think they should. I mean, what they're doing is working, and there's no doubt they're going to extend the cuts, in my opinion. So, they've have good consensus, I think, on extended 3 months. What's time to them? You're talking about supplies over there that last many decades. So what's another 6 months or 9 months to get it right? So yes, I think what we're seeing is good compliance out of OPEC, and so they know they need to correct this market, and they're doing their part to do it. So they can't do it alone. Everybody has to help. And
my last question, Harold, I can't let you go without asking about politics. Do you feel the Trump administration is fulfilling its promise to be more supportive of the oil industry? And if so, what specific things has he been able to do that have helped you?
Well, first of all, cutting all the ridiculous regulations on our industry. I mean, when you look back and tally them up, there are some $1 trillion of bad regulations on this industry. And there's a lot of them still in place. So removing those, correcting it, the prior administration basically just wanted to put us out of business, all fossil fuels. This administration saw it as a driver for this economy, putting people back to work and jobs and putting Americans first. And we're seeing that happen. And this is the 43rd day that we've had record highs of the Dow, the market. So Trumponomics works, it's working. And so the Trump rally that talked about, has become much more than that.
Harold the Believer. Harold, always a great pleasure to talk to you. Good to see you, Harold Hamm, Continental Resources Chairman, CEO, and founder. Bullish on oil, yeah, we knew that, but the why was pretty interesting.